Alrighty, let's get straight to it. This is dealing with the Great Britain pound, the United Kingdom. Um, Overall, you see it's a range. To be honest with you, dealing on the weekly, finished pretty strong with a bearish engulfing. But let's break it down to the daily time frame. Look how it's coming back up into this structure here, right? This purple is dealing with the monthly resistance. Anytime you see the purple, blue is dealing with weekly, right? I do color code my stuff, whatever. I don't care. It's for me to understand what's going on in the bigger scheme of things when I drop down to the lower time frames. Now, this daily here is starting to lose steam. Though even this demand for the pound, which is strong, which is really funny. But I'm still trying to understand the characteristics of the pound, kind of sort of the euro. I kind of already know with the euro, but mostly the pound. But it's losing momentum. I'm surprised that it's appreciating anyway. Their economy is not doing so good. So breaking it down to the 4 hour. Look at this. We in the supply zone, straight up. Right? So if it break this, I'm gonna be looking for, once it break a pullback, I'm gonna be selling it. That's what I'm looking for right now. Because it's losing momentum. So breaking it down to the fundamentals, excuse me. Manufacturing sector. Let's take a look. Business optimism is dealing with the business confidence, right? Right now, bad. Look at this number right here, -47, weak. Most likely due to United Kingdom supply side domestically is weak due to price pressures. I didn't plug in what they said in their monetary policy as of yet. It's a lot to keep up with. The more you stay on top of it, the more that you repeat, if you do fundamentals, it will be easier. Sometimes it's a lot to keep up with, right? But back at it, business confidence is terrible here. Now, I thought that's interesting. So it came out already, so we ain't gonna look at that one. But you see, it got better, right? But we're not looking at January, but it did get better. Anyway, new car sales, tank, weak. Now this is dealing with consumer activity, weak, right? United Kingdom supply side domestically is weak due to price pressures. So they dealing with price pressures there in that economy. For January, the services, weak. Demand is down globally. Composite, not as strong as they want to. Increased over previous. Overall, still weak. All right. Let's see. PPI, producer price index, is a little bit different in here, but it's pretty much the same. Now, with looking at these numbers, my thoughts, it will cause an increase in inflation, which would put a strain on the United Kingdom economy, to be honest with you, right? If inflation increases, you're dealing with a weak domestic economy and inflation increasing. You can't even get consumers to like buy anything. So you getting hit double whammies is and their interest rates is pretty high in that economy as we go through everything. Now output. Let's go down here. Output is dealing with the prices of goods sold by the manufacturers. Sold by the manufacturers. Increased. Like yikes. This is, you know, prices of goods sold by the manufacturers. Now, input is current cost of productions to make it. So let's see. Okay, I got better. Okay, but the month over. Okay. Let's see, output. We'll see how that affects the consumers. Still trying to get a grasp or understanding of this data in the United Kingdom. But overall, I think I kind of get the gist of it. Again, I don't know everything, right? I've been studying over the years. I'm trying to make sense of it. I'm not a financial advisor, okay? I'm just a normal person like you trying to figure this out and have another stream of income. Seriously, right? So make sure you do your due diligence in looking at it. And hey, if you find something, please let me know. I'm really trying to figure this stuff out, you know? So breaking down to the industrial trends, this is dealing with the factory orders. It's getting better, right? We seen in January it was getting better. Um, in February it's getting better. So this is good. Now, of course, factory orders is going to be dealing with the global demand and also the trade wars, dealing with tariffs. So we need to keep an eye on this as well. But overall, it has been getting better, though even it's in a huge negative territory. Projections looks pretty bad, but we will see. Services, the demand, we will see. Now, car production has been getting better. Overall, still negative, but I will be monitoring. It's getting better. Consumer sector coming down. Consumer confidence. I mean, it's not the greatest, but it has been getting better, right? Overall, it's mixed. Um, Last in January, at first, it was terrible. Now it's better, but it's still weak, right? So it's really mixed. Um, you know, Possibly dealing with the boost of payroll change in January reading. So we didn't. Excuse me, y'all. This is my cat. We didn't get to the labor sector as of yet. We're getting there, but they say it's possibly dealing with the boost of payrolls change in January. So this got something to do with payrolls is dealing with pretty much pay. I mean, like yeah. So that probably alleviated some things there. Retail sales, okay. Oh, definitely decreased here. But stronger than what they expected to be because United Kingdom is not doing so good. Their productivity, they're not doing too good. I mean, it's a weak output and everything. So possibly has something to do with the payroll change. You know what I mean? In January, which we'll take a look. So not too shabby here, but still overall not the best. Right? Labor sector. All right, here we go. So 21. So this uptick is huge. This is what they was expecting. So we know the United Kingdom is not doing too good, right? So of course this will alleviate consumers, meaning that it will, some of the weight is lifted off of the consumers in that economy, man. Now keep in mind this is dealing with kind of sort of with the unemployment, honestly. Excuse me, y'all. Unemployment and the United Kingdom. Now, it said UK employment data indicated slight weakening in the labor market. This is, I'm going to be looking for a sell off here. This is not good because not only, again, they're weak in their economy, but their labor market is actually going through it. So if that's the case, right, and their interest rates are high, they're going to have to cut. They're going to have to cut. So I will be, could the next reading for unemployment increasing cause a sell-off. I'm going to be looking for this. Red dot that. I'm going to be looking forward to that. Not forward. Y'all have to excuse me on that for real. But I'm saying with trading, I'm going to be looking forward to that because I'm getting the breakdown. Look, we can get into moral and, I have a whole separate channel on what I'm actually into morally. All this, man, I can tell you, spill my mind on the canvas, right? Of course, this is corrupt. Of course, this is corrupt, for real, right? So I don't want you to think I'm looking forward to these people losing their job. They're a human being like me. That can easily, America ain't so good neither. Straight up. America is not, it's a lot going on over here. So I'm not wishing for nobody downfall. Let me just correct myself there. So I know how the internet is about certain things, this, that, and the third. I'm talking about trading in the market. Straight up. That's what I'm talking about. All right. So I'm not looking forward for some people losing their job, this, that, and the third. This is the market. This is the world, right? Of course, you stand for certain things, right? So don't try to twist that. I'm not looking for anybody actually losing their job. Just want to make that clear. This is only dealing with the market. Trade partner. Nothing new here. I'm gonna still be looking at it. How the tariffs impact this data. Let's see. Noted persist. I don't know if this is new or old. So I'm gonna. Matter of fact, that is old. So I'm gonna keep that there. Sorry, y'all. Central banks. They came out on February the 6th with interest rate remaining in restricted territory. This puts a strain on United Kingdom, pretty much what I was saying before. So check this out. 4.75% at the time they had it. They reduced it to 4.5. Now, looking at it over the course of the time, this is still restricted territory. This is quite high, right? Let's see. Besides the higher short-term borrowing policy outline, casting doubts on whether BOE, which is Bank of England, can proceed with robust rate cutting cycle. Why? Because of inflation and everything, honestly. Emphasize a gradual and careful approach to easing. This shift highlights policymakers' growing concerns over inflation, persistence, and economic fragility. They're going through it in their economy. Now, divisions among policymakers could influence BOE Ford's guidance. You don't want your members to be, one is on this side, one is on this side, it's half and half. Like, that's not a good look. And that would give Ford guidance to us in the market. Now, a wider split will highlight internal uncertainty over the pace of easing. Inflation, as we see, is pretty high. It's pretty bad. So a continuous increase in inflation will put a strain on United Kingdom economy. Will they cut? Will they not cut? They're in a weird spot. Because domestically, they're not doing good as an economy. Now, year over year, article says that updated economic projections, BOE, Bank of England, raises inflation outlook. They raised it, so they know this is going to be a problem or a situation. Now, expecting headline CPI to peak at 3.7% in Q3 of 2025. We're not in Q3 yet. And this is dealing with year over year. So we right here. It's at 3% now. They talking about they projected it to be at 3.7% in Q3. Well, we know Q3 doesn't start until July, September. So we're going to be looking at data on how this will actually impact so we can better position our trades. That is the name of the game. So we know that. Up from prior forecasts of 2.8. So they revised it. The revision reflects higher energy costs and expected increases in regulated utility and transport prices. This is my second time seeing about transport. I have to take a look at that. Anyway, inflation is not anticipated to return to 2% until Q4 of 2027, y'all. It's 2025. I was about to say 2024. I'm tripping. But time be flying. It's 6 months later than previous. So this is bad. Reinforcing concerns that price pressures remain persistent. Price pressures is killing United Kingdom right now. Right? Going down to the housing sector. Look at the house prices. You know that's going to be dealing into inflation. It's been going up. Mortgage rate came down a little bit. Okay, it kind of decreased, but it's more than what they expected. A continuous increase would add to inflation and put a strain on the United Kingdom. You see that here. Like, these prices is crazy. Though even it decreased from previous, it's still resilient. Now, this is gold. Let me see. So manufacturing, what would be the upside if they improve their productivity growth, meaning their manufacturing? Services, they need demand coming in so it can increase. And the fewer interest rate cuts. They need to cut rates, but they're dealing with inflationary pressures. Now, the downside for United Kingdom right now, what I see is that if productivity growth declines more, bad. Inflation increases, which will weaken the economy. House prices. Dealing with inflation will weaken the economy. Business confidence decline, which will not attract investors. Let's see. My notes here. They need things to pretty much stimulate the economic growth. Taking the rates to, let me see. So this will interfere. So this is dealing with their government and new budget. It said critics argue that budget is being heavy on spending, tax hikes, and borrowing, but light on measures to stimulate economic growth, which the United Kingdom severely needs. And it says taking the rate to 4.7%, the budget spending and borrowing plans may limit the central bank's ability to lower rates further because they're trying to restrict inflation. So they're going to have to keep it high. But what do that mean for the consumers in that economy? Not a good look. It's choking them. Market pricing now reflects fewer anticipated rate cuts because of this. Now, this is probably also keeping the appreciation of the pound, really, because they know now the market is pricing in fewer rate cuts. Pay attention to these words and figure out how the market participants look at the market. You want to start looking at that. Now, with expectations that the Bank of England BOE base rate will only fall to around 4% by the end of the year. So that's what they're looking at, projection, higher than previously projected. Updated quarterly. Now, this is interesting. Excuse me, y'all. Updated quarterly monetary policy report, which reflected to downward revisions for growth projections in 2025 to 2027 for United Kingdom. However, inflation forecast, at least for 2025, revised higher. Okay, keep all this in mind, everybody. Such a combination reinforced concerns over stagflation. So they concerned about this, which we have to take a look at that, what that actually means. I'm still, reading up, learning, just like you. A scenario where sluggish growth coincides with persistent inflationary pressures. Not a good look. With United Kingdom interest rates still being in restricted territory, inflation increasing, supply side declining, and the labor market cooling is not good for the United Kingdom. So I am looking for a sell-off a little bit, but I am going to be reading articles and looking at the data, the incoming data. So that is my breakdown for the United Kingdom. Have a few more videos to go, so I'll see you in the next one. One love. Peace.